Good morning. Thank you everyone for being here with us today. We have a great turnout and we have some great topics that I'm excited to share with all of you. My name is Quinn Hart and I'm the leader of our professional services industry segment here at Strothman and Company. And the first thing I want to do is give a big shout out to my professional services team. Here they are. Hopefully you can see this slide. Today's seminar was certainly a team effort, so thank you to all of these beautiful faces who have helped pull all of this together, and you'll be hearing from several of them today. I also want to say thank you to Vince Kane and Jess England, our practice growth team. They're not official members of our professional services team because they're really part of all of our industry teams, but they help in every single aspect of these seminars, and it's very much appreciated, so I want to say thank you to them as well. If you need CPE for this presentation, make sure you respond to all 4 polling questions that come up during the presentation. A recording of our presentation and the slides will be provided to all of the attendees today. Please keep your microphones muted. If you have questions, please use the chat function and send those questions directly to Vince Kane, and he'll make sure that they get to the right people. We will address any questions that we can here in this session today, and what we don't address here, we will follow up with you on. So I think it goes without saying that this has just been a crazy, crazy year. Over the last few months, our professional services team has had many conversations with our friends and our clients to see how they're coping, what's happening in their businesses and with their customers. And with everything that's going on in the world, some businesses are doing really well, some companies are going out of business, and a whole lot of people are somewhere in the middle. Regardless of how your business is doing right now, everyone has had to make huge adjustments to the way they work and the way they live. We were all thrown into this situation without a lot of notice, not much time to prepare, and not really knowing what's coming next or how long this is all going to last. In our lives and in our businesses, we've all had to take steps back and figure out how to make things work in our current environment. So that's why we made the title of this seminar today, Assess and Adapt, because that's what we've all had to do all year, right? We have new information thrown at us, new and strange circumstances, all out of our control. And we have to do the best we can with what we have and make changes where we can to accommodate what things look like in the present and what we think they're going to look like in the future, and keep adjusting as we go. As professional service providers, whether you're a CPA firm, a dental practice, a law firm, a physician, an advertising agency, your job is to make sure that your customers are taken care of. So our job here is to try to help you navigate all of these changes, help you assess your situation, and adapt what you're doing to be successful in this environment so that you can focus on your customers and clients and patients. So assess and adapt is our theme for today, and we want to cover 4
it's supposed to be 2 hours.
That will hopefully help you do that. Everybody please mute if you don't mind. We're going to stay pretty high level with each of these topics today because we have a lot that we want to cover. But feel free to reach out to any of us later on if you have questions on how any of these items apply to your specific situation. So what we're going to cover today, 4 areas: tax law changes under the CARES Act. These are really good changes for taxpayers, so we want to help you take advantage of those. PPP loan forgiveness. We don't have all of the information that you need on PPP because not all of that information exists yet. But we're going to tell you what we do know and help you move forward. IT best practices. Obviously, people have been working remotely. There are new technology issues that have come up related to that, issues that were already in existence that are intensified in our current situation. So we're going to walk through some of those. And then finally, we have some tips for increasing efficiency in your processes and procedures. Everyone wants to save time and money right now. And finding some efficiencies in your processes can help you do that and free up time to focus on what's really important to your customers. So with that, we're going to move into our first topic. So our first presenters today are going to cover some of the tax law changes from the recent CARES Act. Kim Jordan is a manager in our tax group in our Indiana office, and she was one of the original members of our professional services team. And joining her in discussing the tax changes is Sam Haynes. Sam is an advanced staff accountant in our tax group in the downtown office. And he's just recently joined our professional services team, but he has jumped right in and has already done some great work for us. So I will pass it over to Kim and Sam.
Good morning. Thank you, Quinn. Today we will discuss tax updates. Many of the updates were discussed at our June seminar. As guidance has come out since then, you may notice new information. So today we will talk about updating the deadlines and filing issues, Affordable Care Act case hearing, net operating losses, excess loss limitations, expensing of qualified improvement property cost, business interest expense limitation threshold, payroll tax payment extension, payroll tax deferral, employee retention credit, changes to the 2020 retirement withdrawals, contribution limits, community health needs assessments update, and tax implications of the PPP loans.
Good morning, everybody. My name is Sam, and the first topic we have for you today is the deadlines and the filing issues. As we all know, the deadlines for the filings are back on schedule now, as the extended deadlines did expire back in July, on July 15th. Third quarter payments are due as expected on September 15th. We do also know that the S Corp and partnership filing deadlines are on September 15th, like usual, and the C Corp and individual filing deadlines as well. Those are due on October 15th too. While we do know many federal and state processing centers are open, they are open at a limited capacity. They are still running behind and trying to catch up from all of the COVID-19 issues that have been happening. Also, the IRS is still trying to provide more options and different opportunities to try to make up for these limited capacities, but it's still a slow process going at this current moment. Recently, it was announced with the Affordable Care Act that the U.S. Supreme Court has decided to hear the ACA case again, in which several states are arguing that the individual mandate for the ACA, which was revised in 2017, is unconstitutional. The question has arisen if the ACA is found unconstitutional in its entirety, what the impact would be on the net investment income tax for businesses. With some of our clients, you may want to consider filing a timely protective claim if you paid the NIIT in 2016 or in 2017. The main reason for this is we aren't sure of the hearing date just yet. Because of this, you may want to consider filing that claim. If you have any questions, if this applies to you or to your business, you can feel free to reach out to one of our professionals at Strothman. We'll be more than willing to assist you and to walk you through that process and outline those steps for you as well. And here's Kim with the next topic.
The information pertaining to net operating losses has not had any further changes issued. Under the CARES Act, so what we have here is what we did prior to the Tax Cuts and Jobs Acts. It was a 2-year carryback with 20-year carry forward. Under the Tax Cuts and Jobs Act, there was no carryback, an indefinite carry forward, and an offset. But under the CARES Act, for 2018 and 2020, net operating losses have a 5-year carryback and carry forwards are indefinite. Only individuals and C corporations can elect to carry back their net operating losses from 2018 to 2020 by filing an amended tax return. Next slide. Excess loss limitations. As with net operating losses, there have been no further changes issued for this. Taxpayers would need to file an amended tax return for 2018 and 2019 to request a refund if their losses were limited by the Tax Cuts and Jobs Act.
Okay, our next topic is the qualified improvement property. There have been no changes since the June seminar when we spoke about it earlier. The Tax Cuts and Jobs Act contained an error that prevented taxpayers from taking accelerated depreciation on costs to improve certain property. The CARES Act allows taxpayers to take the intended, more beneficial treatment on 2018 and 2019 returns. Qualified improvement property is eligible for 15-year depreciation and bonus depreciation. Qualified improvement property, it needs to be on the interior portion of a building. It's a non-residential real property placed in service after the building, and it does not include enlargement of the building, an elevator or escalator, or the internal structural framework of the building itself. If change is to a 2018 and you have not filed your 2019 return, you can file an amended return for 2018 or apply for a change in the accounting method on a later return. If you've already filed your 2019 return, though, you apply for a change in the accounting method to correct a 2018 qualified improvement property.
Business interest expense limitation. On July 29th this year, the IRS issued final regulations regarding the limitation for the business interest expense deduction under Code Section 163J. The final regulations follow the proposed rules that were issued in December 2018 with some modifications. The safe harbor for qualified residential living facilities was proposed to apply to tax years beginning after December 31st, 2017. The business interest limitation calculated originally included a 30% computation of taxpayers' adjusted taxable income, or ATI. With the final regulations, the percentage limit is increased to 50% of ATI for 2019 and 2020, except for a partnership, which the 50% limit applies to 2020 only. One significant change is that the final regulations provide that any depreciation, amortization, or depletion that is capitalized into Inventory Code Section 263A before 2020 will be added back to the tentative taxable income in calculating the adjusted taxable income. Next slide. Payroll tax payment extension. While there have been no further changes issued with this, I'd like to go over a few questions we've encountered since our June seminar. With the PPP Flexibility Act enacted on June 5th, employers that received a loan through the Payroll Protection Program can also defer the employer portion of the 6.2% Social Security tax for the period beginning March 27, 2020 to December 31st, 2020. The credit is to be applied you apply for the credit on a quarterly payroll tax return form 941. However, if an employer has already made the payroll tax deposits that include the employer portion of that Social Security, then a refund or credit cannot be claimed for those taxes during that period. For repayment, the IRS does intend to issue reminder notices to employers before applicable due dates in 2021 and 2022. Again, the payroll tax payment extension is a request to defer paying tax. Next slide.
And with our first polling question, it looks as though it is, what attracted you to today's seminar? And we've got multiple choices for you here. The first one's the PPP information. The second one is professional services tax update. Third is the IT and security and best practices. Fourth is the Lean Six Sigma information. And last is I just needed CPE credit. So feel free to check the one and go ahead and hit submit.
Thank you, Sam. Going further with our payroll tax deferral, on August 8th of this year, President Donald Trump issued a memorandum to the Secretary of the treasurer titled Deferring Payroll Tax Obligations in Light of the Ongoing COVID-19 Disaster. The memo laid out steps for an employee withholding deferral and will not require employers to do anything before September 1st, 2020, unless there is additional guidance or legislation passed. The memo, it's the next slide, there you go. The memo instructs the Secretary of Treasury to use his authority to further the withholding deposit and payment of the employee's portion of the 6.2 Social Security withholding. The deferral would apply to workers whose wages are generally less than $4,000 biweekly or $104,000 per year. So with the payroll tax extension, that's the employer portion. Now he's saying he's issued a memo for the employee's portion. It is a non-executive order. It is only a memo at this time. The memo does not eliminate the obligation of the employee to pay the tax. It just defers it. As this is only a memo, additional guidance is required from the IRS to determine if the wage limits are appropriate or if there will be any opt-out option for the employee. Additional legislation from Congress would be needed to forgive any deferred tax obligations. The repayment period has not been determined, but could occur in 2021.
Okay. With the employee retention credit, there hasn't not been any changes since our June seminar, but just to briefly go over it, the payroll taxes for wages paid from March 12th of 2020 through December 31st of 2020 of certain qualified wages for businesses in which operations are fully or partially suspended due to a governmental order related to COVID-19, or gross receipts are less than 50% of the receipts for the same calendar quarter of the prior year. The amount of the qualified wages for the calculation of the credit depends on the number of employees that you have. More than 100 employees, qualified wages only include those paid during the time the business was shut down. But if you have less than 100 employees, you may generally also count wages paid during quarters in which there was a significant decline in your revenue. The credit computation is capped at $10,000 in qualified wages paid per employee, which means the actual credit is capped at $5,000 per employee for all calendar quarters. The credit is refundable if it exceeds payroll tax liability. There are other limitations in place for employers who take out payroll protection loans or who receive other payroll tax credits. If you received the small business interruption loan under the payment protection program, you are not eligible for the employee retention credits.
Changes to the retirement withdrawals for 2020. No further changes have occurred since we discussed this in June. We just want to point out that withdrawals will not be subject to the 10% additional tax for taxpayers who are not 59.5 upon withdrawal. In addition to the withdrawal, eligible individuals could also borrow up to $100,000 from a workplace plan if allowed until September 22nd, 2020. Next slide. To be eligible for the relief or for this, the individual would have to be diagnosed with COVID-19 or their spouse or a dependent of theirs diagnosed with COVID-19. Also, if they experience adverse financial consequences as a result of the COVID-19, if the individual, their spouse, or a member of their household had been furloughed, laid off, more hours reduced, being unable to work due to lack of childcare, having a reduction in pay or self-employment income, or having a job offer rescinded due to COVID-19. Also, if there was a closing or reducing of hours of a business owned by the individual or the individual's spouse or a member of their household due to COVID-19.
Charitable contribution limits. This hasn't changed since our June seminar either, but a brief overview. For individual taxpayers who itemize deductions, the CARES Act suspends the 60% adjusted gross income limitation for many charitable contributions and instead allows 100% of AGI. This applies to cash contributions only, and only those where the charity received the benefit in 2020. This is not for gifts to donor advised funds. Corporate taxpayers who normally have a 10% income limitation instead will be limited to 25% of income this year. Also, individuals who take the standard deduction will receive a charitable contribution deduction of up to $300 for cash contributions made during 2020 to certain 501c3 charities as well. One new piece of information that we did find is that the Community Health Needs Assessment did receive an update. In response to the ongoing coronavirus pandemic, Notice 2020-56 extends the deadline for conducting a Community Health Needs Assessment, a CHNA, and adopting an implementation strategy to meet the community needs identified through the CHNA through December 31st of 2020. Tax-exempt hospital organizations filling out their Forms 990 must indicate on Schedule H if they've conducted a CHNA in a current or either of the two immediately preceding taxable years, and if they've adopted the implementation strategy to meet the significant health needs and identified through the most recently completed CHNA. What organizations are going to need to do is in the narrative portion of the Schedule H, Part 5C, they need to outline that they are relying on the relief provided in Notice 2020-56, and they should not be treated as failing to meet the requirements of Section 501R3 prior to December 31st of 2020. Back originally, April 15th is typically the deadline for this. They extended it out to July 15th of this year. And then they reevaluated it again in July and decided to extend it further into December of this year is what they did for this. So they provided a little bit of extra guidance and a little bit of extra grace this year in hopes to provide these tax-exempt organizations with the opportunity to meet the requirements that are needed. And then our last topic that we're going to be discussing is going to be the PPP loans. And just to briefly give you an update and an overview on that before Ken dives into Notice 2020-32. Section 1106I of the CARES Act provides that any amounts that would be included on the forgiveness of the PPP loan shall be excluded from gross income. Applies regardless of whether the income is characterized as COD income, includable under Section 61A11, or as income otherwise includable under Section 61. While the CARES Act did not address the expense side of the equation, the IRS did address the expenses, and Kim is going to outline that with you here, as well as go over an example for you here.
As Sam mentioned, Notice 2020-32 is the IRS's response to what the CARES Act did not address when it was passed. The Payroll Protection Program was developed to help employers with their payroll costs during COVID-19 disaster, and the funds could be excluded from gross income if forgiven. Generally, there is no income on the receipt of loan proceeds unless there is forgiveness. Upon forgiveness, there would be an obligation to report it as gross or taxable income. It is suggested that the loan forgiveness is a class of exempt income, and the borrower could not claim the deductions that are related to the class of income under Section Code 265 and Regulation 1.265-1. This may not have been the intent of legislators, but the situation could allow for a double tax benefit if the expenses were excluded or included with the income, with the forgiveness excluded. We will have to wait to see if the IRS provides a definitive ruling by year end, as far as if they're going to allow the deductions to stay on your records or your income statement and you take those deductions and not claiming the forgiveness of income. Next slide, please. We've got an example. Until that time that the IRS provides that ruling, if you received a significant PPP loan, tax planning for the forgiveness would be beneficial. In our example, company K&S Incorporated received proceeds from the Payroll Protection Plan of $300,000 They expect 100% loan forgiveness. Without the PPP in consideration, they have income of $800,000 and expenses for wages, payroll tax, labor, rent, utilities, office expense, miscellaneous, totaling $760,000. Their taxable income is $40,000. In a year before the CARES Act, if you had a loan that was forgiven, it would be cancellation of debt income and be included in your total income. So you'll notice in the second column, the income would go up to 1.1 million. They would keep all the expenses at 760,000, but their taxable income would be 340,000. The way the Congress has and IRS has laid it out, when you exclude the forgiveness income, the total income stays at 800,000, but you'll notice the expenses have been reduced by 300,000, still leaving the taxable income at 340,000. The excludable expenses are the ones that would be specific or that were applied for when they did the forgiveness application. Our example was created for the loan if it was forgiven in 2020. If the loan is forgiven in 2021, you may need to amend your 2020 tax return if expenses are not adjusted for the expected forgiveness. If you have any further questions about the PPP loan forgiveness or how to report it in your bookkeeping, please feel free to reach out to one of our professionals at Strothman & Company. And I think we did have a question in the chat. The question was, who is responsible for deferred tax payment if the employer defers the employee portion, then the employee leaves the company? That is one of the questions the memo did not address. And the AICPA has requested that from the IRS. So that's something we're still waiting on. And hopefully we will have an answer by September 1st. Are there any other questions?
No, this was a lot of information, a lot of different topics. We really just want to give you an overview of what's out there so that you can contact us if you think that any of this applies to you. So great job, Kim and Sam. Thank you so much for that. If there are other questions, put those in the chat or send those directly to Vince Kane and we'll address those either later in the presentation or we'll get back to you. So, okay, our next presenters are going to cover more information related to PPP loans and forgiveness. First, we have Joyce Smith, who is a partner in our Middletown office. She joined our professional services team officially earlier this year, but she's been working on clients in this space for a very long time. And joining her today is Jimmy Evans. Jimmy is a senior market lender for Central Bank and Trust, and we're happy to have him today as a guest speaker. So I will turn it over to Joyce and Jimmy.
Thanks, Quinn. We appreciate that. Around the end of March, we all started on this PPP loan roller coaster, I guess is a good way to describe it, together. We started getting information and it sounded really good. And then as we were applying and helping businesses apply, I think we all realized that there were more questions than answers, and it's continued to be that way. And now that we're in the PPP loan forgiveness phase, we're encountering the same types of things. So it feels like a hurry up and wait type thing. I think we're all in that roller coaster together. So today, Jimmy and I just want to give you our bird's eye view of the information that we have available now regarding our PPP loans and loan forgiveness. The loan application process is now closed. It had been extended until August the 8th, but it is now closed. And there were about 5 million PPP loans that were issued. 86% of those loans were under 150,000 each. 94% of those loans issued were under $350,000 each. On June the 5th, the PPP Flexibility Act was enacted. There were a lot of modifications and additions that are meant to be borrower friendly. They are meant to help us achieve 100% forgiveness. And what we wanted to do today was cover briefly those modifications and also a couple of the safe harbor additions. There are still questions open on these, but we're trying to give you what we feel like is the information we have available today. One of the modifications was regarding the covered period. The covered period for all loans, regardless of the issue date, is now 24 weeks. If you were issued a loan before June the 5th, you can elect an 8-week period in order to get your forgiveness, but you're allowed that 24-week period. If your loan was issued after June the 5th, you do not have the 8-week option. You will be under the 24-week covered period. And you cannot have your covered period extend beyond December 31st. So if you were one of those businesses that got your loan late in the loan origination period, you may only have a 20 or a 21 week covered period because you cannot have that extend past December 31st. Flexibility Act also helped us with the rehire rule. Regardless of your covered period, if you have a reduction in your full-time equivalents, your FTEs, or a reduction in your wages that you're concerned about may cause some of your loan to be taxable to you. If you can cure that on or before December 31st, then the Flexibility Act is going to allow you to do that without having to include those FTEs as a reduction for your loan. So June 30th is no longer a date that you had to have had your full-time equivalents restored or your wages restored. We're all under the December 31st period now. The Flexibility Act also changed some maturity date rules for us. If your loan is issued on or after June the 5th, you now have a 5-year maturity date. If you had an older loan that was issued before June 5th, you have the 2-year maturity date, but lenders are permitted to extend that to 5 years. So if you have concerns about that, if you didn't have 100% forgiveness, you're continuing to have issues with your business due to COVID, we would suggest that you get with your lender and speak with them if you do have repayment that you have to make. Flexibility Act also gave us some payment deferral modifications. So at one point we were concerned that you may have to start repaying your loan before you even knew if the SBA was going to forgive it all or not. But because of the Flexibility Act, the repayment now is deferred until after the SBA remits loan forgiveness amount to the lender. So if you're concerned you're going to have to pay any of that back, you don't have to worry about repayment until the SBA gets back with your lender and gives an amount that needs to be repaid. If for whatever reason you don't choose forgiveness, then your payments will begin 10 months after the end of your covered period. I think a real plus in the Flexibility Act for all of us is the 60-40 rule, the new rule. You now as a borrower have to spend at least 60% of your PPP funds on payroll costs, and you can spend the other 40% on other allowable PPP expenses. And Jimmy has some information a little bit later that'll better define payroll costs and what that includes, and also what some of the other allowable expenses are. So the initial 75% of payroll costs, 25% of other allowable expenses is gone. We're all working under the 60-40 rule now. Prior to the Flexibility Act, we had several exceptions to the FTE reduction rules. And the Flexibility Act added to those a couple of safe harbors. Safe harbor number 1 relates to a business that is unable to rehire individuals that they had employed on February 15th and is unable to hire someone that has qualified abilities in that same type of job for that unfilled position. If that can't be done before December 31st, and you can show that that happened to you, you can apply for the safe harbor and not have to reduce your FTEs when you are calculating for your loan forgiveness. The second safe harbor is very vague, and at this point we don't have much that's going to help us better determine what they were trying to get at in the Flexibility Act. If your pre-February 15th business activity cannot be returned to in the period from March 1st to December 31st, and it's because CDC, OSHA, HHS, because of their requirements for your business about maintaining social distancing and sanitation, other things specifically related to COVID-19, then you can use safe harbor number 2 to not have to reduce your FTEs in your calculation for loan forgiveness. But we are waiting for additional information on that. I would love to be able to give you an example, but I can't at this particular time. So just remember that we do have safe harbor additions in addition to the exceptions that we had originally. Jimmy is going to provide us some information about what we know on PPP loan forgiveness.
Good morning, Joyce. Thank you. I would reiterate what Joyce said in terms of this being a bit of a roller coaster ride, certainly from the beginning with origination of loans, and then throughout the course of that time frame, learning different changes and getting additional guidance on this entire program, and then now into the loan forgiveness period as well. So again, I think all of us are having to demonstrate great patience and flexibility, but all in all, I think this has been a great program for our clients, certainly at the bank, and hopefully that's been your all's experience as business owners and tax professionals that are involved in assisting those business owners. So again, the change as far as the 24-week covered period is significant. And here, just talking about the cash compensation limits in that regard, you can see with the example there for non-owner employees, you can see the example of that calculation and what that allows for in terms of the additional time frame of the covered period being extended to 24 weeks. The $100,000 mark is sort of the key there as well. So, that is the limiting factor here. So if you have salaries or any payments that are above that, you would exclude that. But again, you can see based on the calculation, again, the impact of extending that to 24 weeks. And then you'll see the same as we move over to owner employees, self-employed, and general partners as well. And I think you're taking a close look at looking at the lesser of and what that means. And again, focusing really on the 24-week covered period. Again, the maximum is the lesser of $20,833 or 2.5 months of 2019 compensation. And again, really that limiting factor there is that $100,000 cap on cash compensation. And then when we look at non-cash compensation, so employer paid benefits, health, dental, vision benefits, all of those are items paid during the covered period for coverage during the covered period. They're not allowable for anyone with 2% or greater S-Corp ownership and family members, self-employed individuals, and general partners. As far as retirement benefits, you cannot accelerate those benefits outside of the covered period. Other items that are included here in terms of non-cash compensation, state and local unemployment taxes paid. Additionally, as far as non-payroll cost, if you've got owner occupied real estate and you have a mortgage on the property, the interest that you pay on that mortgage that would be incurred before, if you had a mortgage that was in place before February 15th, the interest on the mortgage during that covered period would be a non-payroll cost item that you could include. Same thing for rent. You don't have to own your real estate if you are renting. Those lease payments, again, for a lease that's either been in place before February the 15th or if a recent renewal had taken place. And then also utilities, whether that be if you're owner occupying the property or if you are leasing and you are responsible for those utilities. That really includes, as we've cited here, electric, gas, water, telephone, and internet as well. So cost paid or incurred during the covered period and incurred during the covered period and paid after the covered period, but on or before the next regular pay date. So that's an important thing to keep in mind as far as when you're looking at that covered period. Keep in mind the exceptions to that: employee group health benefits and accelerated retirement benefits as well. So talking about the consideration here again with loan forgiveness, it is expected that by adjusting the covered period to 24 weeks, that almost 100% of borrowers are expected to have their loans forgiven. So again, I think that's a significant change from the 8-week period to the 24-week period, and is really helping folks out quite a bit. Borrowers can submit their forgiveness applications at any time if you have exhausted all the funds. So if you've utilized all your funds, even if you haven't come to the end of that 24-week covered period, you can begin to go ahead and assemble your information, work with your tax professional, and submit for forgiveness. Early applicants have to account for wage reductions in excess of 25% through the end of their covered period. And early applicants do need to account for subsequent reductions in full-time employees as well. So I think those are two good points to keep in mind for everyone. And so as far as loan size with this program, the SBA is going to be reviewing all loans $2 million and greater. So on those loans that are below $2 million, the lenders are very much involved in the process here. We actually here at Central Bank have engaged a third party to assist us with this process. But the lender has 60 days from the receipt of the completed application for forgiveness to issue a decision to the SBA. And then in turn, the SBA has 90 days to render a decision back to us. Here's the fun part, or at least I think about this, is having to hang on to all of your documentation for 6 years after the loan is forgiven. That is something that I think you want to be very mindful of as a borrower, and be certain that you do have good records and that you do maintain those either hard copies or electronically. So again, keep that in mind. That's not always easy to do, but something that's necessary with this program. And then there's been a lot of conversation around how changes may further come in terms of the forgiveness process. We do believe that there's going to be a more simplified approach for the forgiveness process for the smaller loans, and that being smaller being 150 or less. Some conversation around that you may see an automatic total forgiveness on those loans of less than $150,000. Again, more to come on that, but again, that seems to be a fairly anticipated change that will come forth. When you look at that accounts for 86% of total PPP loans. So that would be a large amount, certainly. And while that covers a lot of folks, it's really it's less than 30%, less than 26% of all PPP loan dollars. The other thing that's being talked about and discussed, and we're anticipating to hear more on this soon, is a second round of PPP loan program and dollars. So again, as always, just stay flexible and be patient, I think, with the process, and there's certainly more to come. Thank you.
Thanks a lot, Jimmy. Jimmy and I have worked together before, and it was really exciting to be able to present with him today, so I appreciate you for doing that. I also want to thank Central Bank for partnering with Strothman today on this segment of our program. So we have our polling question number 2. Did your company receive any PPP loans? Yes, no, or we hope you don't say I'm not sure, and you can submit.
We did have one question, at least one question that I know of come up. Someone asked what if your expenses exceed the PPP loan? And the answer that's been provided is that there have been no changes, no issues in that scenario. Forgiveness would be based on the lower of your loan amount or the amount spent on allowable expenses. So presumably then anything spent over the amount of your loan or your forgiveness would still be a deductible expense. Any other questions? We have just a couple of minutes extra here before we need to go to the break. If anybody has any additional questions, I don't see anything else in the chat. Okay, if those questions come up, feel free to put those in the chat and we will respond to those. All right, thank you, Joyce and Jimmy, so much for that information. And I'm sure once we have more information on the PPP, we'll do another segment to let people know more of any future changes. The next person that we're going to hear from is another guest speaker this morning, John Clark. John is the Vice President of Business Development at Advanced Business Solutions, a full-service IT company, and they work with many professional services firms, including Strothman & Company. So he's here to give us some best practices for our current environment and tell us more about what he does. And he's going to be joined by Tucker Oldham, who leads their account management team. So I will pass it over to John and Tucker. And we also have our third polling question pop up. So please answer that and submit.
Thank you, Quinn. Can you hear me?
Yes, sir.
Awesome. Well, thank you for the introduction, and thank you, Strothman & Company, for allowing us to be a guest speaker today. We're going to switch it up a little bit. We are an IT company, as Quinn said. We are based out of Louisville, Kentucky. We've been in business for almost 25 years. And our job is to manage IT and cybersecurity services for our customers. We're doing this on a daily basis. A lot of focus on assessing and adapting. I really loved the title of this series that Strothman put together. These are the things that Tucker and I are doing on a daily basis, talking about these items with our customers, especially now that we're all working from home and reacting to the COVID pandemic. Before we get too further, I wanted to quickly introduce ourselves just a little bit more. Like Quinn said, I am John Clark. I've been with ABS for almost 15 years. Most of that time I was a technician or a manager in our operations division, and recently I've been tasked with leading our business development department, which is sales and marketing. I'm happy to be here to speak with you guys or speak to you guys. And I wanted to bring my friend Tucker Oldham. Tucker, would you like to introduce yourself?
Sure. My name's Tucker Oldham. I am director of our technical account management group. Those guys handle our customers that are our managed service customers, and we do everything from being their main points of contact, but primarily our role is helping them create IT roadmaps, and that obviously includes adapting to the current environment and some of the major changes. So from a technology perspective, we help you lead down the path. From a PPE perspective, I clicked I need major help on my survey just now. So not my area of expertise by any stretch, but certainly can help from a technology perspective.
Not my area of expertise either. I'm thankful for the company who are taking care of us. So I want to kind of clarify. I know we've got quite a broad audience as far as roles in the companies and shapes and size of the companies. We are normally speaking to small and medium businesses. We do work for enterprise level customers, large size customers, but they normally have an internal cybersecurity team that we help augment, and we're giving more direction to those small and medium business areas. So today we want to talk about assessing your current risks and adapting and protecting your company. And I just kind of want to start, Tucker, right away with the one that's most popular, the risk that's most popular, and that is ransomware.
Are you guys able to see the slides? Because I'm not seeing.
Quinn, are my slides showing for you?
No,
No? Let me,
I may not have stopped sharing fast enough.
that's all right. Let me try to reshare here.
I think we're.
I've already shown so many beautiful
There
slides.
we go. There we go.
There they are.
Yeah.
Okay, good. Thank you all. Thank you, Tucker. So ransomware, I think everyone knows or has heard of it, but it is a huge business. You can see in the statistics we have on the screen here, over the last year, the cost to businesses have doubled into the $20 billion range. A lot of our customers that we talk to kind of have a misconception that they are not a target. They see in the news as recently as Garmin being the big brands that are attacked, and they start to think that I'm a little small company in Louisville, Kentucky. They're not going to come after me. And that is just not the case. You can see there on the bottom in the middle, 20% of ransomwares are small to mid-sized businesses. That's $4 billion of that anticipated cost to companies just in this year. What the bad actors or criminals are doing, they're using AI and automation to find vulnerabilities, whether that's phishing or spoofing your employees, trying to trick them into clicking on things, or just scouring the internet looking for vulnerabilities. They find those, and they know whatever network they've gotten themselves into, that is most likely someone's livelihood. And if they can capture that and encrypt it, they've now given themselves some leverage to get some money from that company. They are kind of using the same old tricks, aren't they, Tucker?
Yeah, but in the theme of today, it's it's assess and adapt, right? So one of the things that we're noticing is the adaptation of these threats and taking advantage of COVID and the campaigns that the bad actors are using are now steered around COVID. Things like emails saying check your test, or see the growth rate of COVID in your state, click here. Things along those lines are some of the spam that we're starting to see, and ransomware coming through that spam, John.
So a couple of stats. I've just pulled some headlines from a Google search. 148% spike in ransomware attacks in the financial industry, heavily targeted. I know you guys are financial resources for your companies, maybe not in the finance industry, but I thought that was a pretty heavy statistic to bring out to you guys. And the other one being that 4,000 cyber attacks per day since the pandemic started. That's an 800% surge. So they are just like any common criminal. They're taking advantage of a hypersensitive situation. So Tucker, how do we help companies protect themselves from these types of things? We start to ask ourselves and talk to our customers about a couple of things. Where do we want our security balance to be? Because the more secure that we are, the less easy it is to use our applications, or your users kind of perceive it that way. I often recall a story of when I was working in a local hospital, and we turned on multi-factor authentication for a number of physicians' emails. We educated them that it was happening, but their perception of ease of use of yesterday I could get to my email right away, now I have to jump through these hoops. That was a very simple example, but we want to make sure that we're talking to our customers. Where do you want to be? Do you want to be heavily secure? Do you want to make sure that you're keeping some semblance of ease of use? Tucker, the second thing we do is we choose a framework, a methodology, if you will.
Yeah, one thing about when we think about the adapt piece of this, when we're thinking about COVID, we wanted to make, when we went home to work, we wanted to make it as easy as possible for folks to get home and work. At the same time, thinking about John's previous slide, did we really take a step back and think about how secure we made that environment versus just the functionality and ease of use once we sent everybody home? Something we're talking with our customers quite a bit about. From a security perspective, when we think about that, we utilize the NIST framework when we're doing security assessments for folks and trying to develop a security plan for our customers. For those that aren't familiar with NIST, National Institute of Standards and Technology, it is a part of the Department of Commerce. And they created an excellent cybersecurity framework that encompasses a lot of things from the different compliances, things like HIPAA and PCI and FINRA and you name the compliance. Most of the time, if we utilize the NIST framework, we answer most of the questions on those different compliances. So it helps us create a standard no matter what business you're in, and frankly was developed for businesses that didn't have a compliance but needed a path to follow to make sure they were secure. The big critical thing to understand with NIST is that there are 5 different areas: identify, protect, detect, respond, and recover. And when you step back and very simplistically look at your environment, make sure you are doing something in one of these 5 areas. Have at least one thing in those 5 areas that you're doing from a cybersecurity perspective. We'll talk about that as we go through this, the deck here.
So Tucker and I wanted to, this is usually a much longer conversation. We wanted to distill it down as best we could. So we kind of look at security as layers. You've got several things that you can do, and you need to protect yourself and your company in several different ways. And we always want to start by identifying the vulnerabilities. We call this a risk assessment, or layer 1, if you will. You and your company, you should be looking at doing a cybersecurity risk analysis at least once a year. And that's not just the internal and external white hacker kind of stuff, doing penetration or vulnerability tests. You need to be taking a holistic look at how your employees or your vendors, or sometimes even your customers, are interacting with your IT that drives your business. Especially as we're moving out of the office. What are the vulnerabilities there? That is the entire goal of that analysis, is just to identify it. Educate me, the business owner, what are my vulnerabilities, so I can make good educated decisions on what I need to shore up. Once you get that done, Go ahead, Tucker.
Yeah, just sticking with the theme of today, it's assess and adapt, right? So one of the things, the critical piece, the piece of the NIST framework is identify, and that's the first one. So many of you, I'm sure, have done a security analysis or assessment on your network, but it's that adapt piece. You know, as we go through these slides today, I want to make sure I'm covering things that have changed over the last 6 months because of COVID. And I highly suggest, even if you're doing an annual assessment, that you think about moving that time frame up because your networks have changed so much with folks going to work from home, and your data is sitting in much different places than it was before the pandemic hit, and making sure that we still are following best practices from a security perspective. The easy way to identify that is through an analysis, John.
Once your analysis is done, you should either be provided a roadmap, or maybe your internal IT team creates a roadmap to harden your security posture. Be diligent with the execution of that. Oftentimes we see companies plug some of the larger holes, the more risky holes, and they leave the rest of them. They get a false sense of security, and that ends up being the vulnerability that it's exploited, and turns out to be the cause of their bad day. So once you get a plan, make sure to see it through in a reasonable manner. Once you start looking at that plan, we want to kind of talk about actual layers of security. These are policies and hardware, software, services, things that you can implement in your company to start building those layers of security. And the first one I always like to talk about first is just the old school traditional IT security, things that we all should know about. All of our companies should be making sure are up to snuff. And that's antivirus, patching of your workstations and servers, creating policies like password policies, and backing up your servers and things. Sometimes people can kind of get a false sense of these things are okay. I bought a firewall last year or 3 years ago. Everything's fine. That's a brand new one. But there's ever evolving updates that maybe you're not paying for. Antivirus might not be centrally monitored. How do you know that all of your applications and things are being updated as they should?
Yeah, this is that protect layer when we think about the NIST framework. And traditionally, we call it the traditional IT security simply because traditionally businesses have invested in that protect piece. And it's critical to understand how much this has been affected by COVID and our work from home policies. You know, are we connecting into the main network on a regular basis so that regular patching is being done? Backup and disaster recovery, traditionally those have been all about backing up the servers. Well, now I have end users at home that aren't necessarily connected to the servers all the time, saving documents in things like OneDrive or Dropbox or whatever the cloud storage is that your company uses. How are we backing up that data, ensuring it's protected, ensuring we can recover if we do have issues? All of those are things that have changed dramatically in the last 6 months, and how we have to approach those and make sure that we have that data secure, John.
So I'm going to ask Strothman and company after this is over to send out a white paper that we put together. It's detailing how ABS responded to one of our customers when they were in a time of under attack of ransomware. And the two middle things I have here on the screen, remote access and supported operating systems. These were the two things we were educating them they needed to fix. We didn't do it in time, or it wasn't approved in time. There was public facing remote access on a server that was no longer being supported by Microsoft. And while we were able to mostly save the day for them, there was a risk of a high six-figure dollar amount to get them out of that. So I'm looking forward to sending you guys that white paper. Traditional IT security is an important layer there.
Hey, just real quick on that, one of the things at the bottom there was the written IT policies. I'm sure everybody has a IT policy that they have in their employee handbook. Very important for you to update that for home use and make sure that your employees understand proper use when they are working from home.
So Tucker, on to what we call the essential IT security layer, and it doesn't matter what industry our customers are in. We let them know these are 3 things that you should be implementing into your environment above and beyond traditional IT. You start to layer, as I said earlier, because those bad actors, they figure out a way to get past that traditional layer and get into things like phishing and spoofing your employees. So one of the best things that we can do is make our employees a human firewall. And you can do that through cybersecurity awareness training. What you're doing with this is empowering your employees to make good decisions on behalf of you and your company. You're implementing mandatory annual cybersecurity. There are services out there. ABS does some of this stuff, but you're educating them on a yearly basis. And throughout the year, you've put into place consistent self-phishing or spoofing training where you're developing or creating an email that looks like it came from a legitimate source. And if somebody clicks on it, you have one of those policies Tucker was talking about where they have to do retraining or they get a slap on the wrist. It really has a sort of a shame factor if you want to kind of create that where people kind of get embarrassed if they get caught, but it really does work. You can see that graph there below that when these campaigns start, you have about a 40% click rate. And after your first quarter, you've reduced that quite dramatically. And this again is the bad actors have gotten past your firewall and they're attacking your employees. Let's prevent them from clicking on that.
Yeah, we've talked about identify, protect. The next stage in our framework is detect. And the best way for us to detect threats that have gotten through is our end users. And the more that they are aware, the more they're looking for threats, the better off your security posture is going to be, particularly now that, again, they're at home and a lot of those protection methodologies we used for the office aren't in place when they're checking email. Email is probably 95 to or above % of the threats we see. The successful penetrations come through email. And the more that we're paying attention to those threats, the better off you're going to be from a security perspective.
Tucker, what if they click on those things? Our training did not work.
Yeah, but we utilize a solution that most folks do not have deployed today, and this is a big one for us, a DNS filtering layer where before you go to a website, before you download a document, you make a request out on the internet for a domain name. So just think about that as a website name or something along those lines. We utilize a security service for a lot of our customers that checks that address against a whitelist and make sure that's not a malicious site. So the way phishing works is you click on a link that you think is good, but it takes you to a bad site. This solution checks that site to make sure it isn't. So everything from geo-fencing, if you don't do business in Russia, chances are your employees shouldn't be visiting a Russian site. So we block things like different countries where there are known threats. We also block sites that have been put up in the last 30 minutes. It doesn't. Most all the hackers throw up a site very quickly and then deploy that out to the field. So it uses a lot of artificial intelligence and a really solid solution because it's not about having to be in the office. This can be deployed on workstations, and no matter where you are, if you are mobile, if you are at home, it is always checking those sites to make sure that they are not threats.
Yeah, Tucker, what we saw when everyone first started going home 4 or 5 months ago, that was one of our biggest concerns, and being able to deploy that type of solution as fast as we were able to, and not just on the company computers, we were able to put it on people's home computers that companies were forced to use. It was a pretty awesome thing to see our service team be able to add that layer as quickly as we did.
Yeah, very simple solution and very very effective for mobile users.
Your stat earlier was almost spot on. 91% of all cyber crimes begin with an email.
Well, we're talking with a lot of accountants today, so I missed by 4%, and I'm sure they'll hold that against me. But the other piece of this is email security. Again, that threat is huge out there. One of the things that we are kind of amazed at this point is how many customers we onboard into our managed service program that do not have multi-factor authentication turned on. That is huge and almost a requirement. And with all the banking you all do, you're very familiar with multi-factor authentication, the idea that it's not just a password, it's a code that potentially you're entering via your cell phone, things along those lines. Making sure that there are two forms of identification and email, Office 365, Microsoft offers that, and again, just amazed at the amount of folks that do not have that feature turned on. And it will cut down dramatically if you have been compromised. Those bad actors cannot use your email account if you have multi-factor authentication turned on. There are some other things too that we recommend. Making sure your spam solution understands high-risk countries, and geofencing is a big one, but also there are things that you don't even have to invest in. If you have Office 365, they have a tool that you can simply turn a banner on saying this is an external mail, so that your end users are paying a little more attention to those mail, that mail versus something that came from an internal employee.
Tucker, I still get emails. Actually, we put in a layer of security that stopped these, but I used to get emails from Mark Lewis, who is our owner, asking me to go out and buy 10 $100 iTunes gift cards, scratch the back, and send him pictures. I am smart enough to know that's not a real email, but that banner being there, that visual cue for me as a user, alerts me and prevents me from making a fatal mistake for the company. Last but not least is a more advanced layer of security. In our organization, this is usually talked about with Tucker and his team with our customers. So Tucker, I'd like for you to kind of continue to dive into this one for us.
Yeah, there are solutions out there, and you need to, the first thing John and I talked about was a security assessment, and that is critical to understanding what your risks are. If you are dealing with incredibly high sensitive data, if you are dealing with compliance issues, you may need to look at some of these solutions as well. The first one being event monitoring system. We call it a SIM because we have to have acronyms in our industry. And the idea with that is it in real time, we are looking at your event logs and things flowing in and out of your network and reacting to those in real time via a security operations center. And so it's a mix of artificial intelligence because of the amount of data flowing in and out of networks. But once we identify something via that artificial intelligence, real live engineers are looking at it to make sure it's see if it's a real risk and deal with it if it is. The next one is additional email security layers. A lot of folks don't realize Office 365 is not backed up. So if you need to add a layer of archiving to that solution, we do that for a lot of customers so that you can save emails for legal hold or long periods of time. A lot of that is not done within Office 365 at its base layer. And then finally, mobile device management. If Office 365 natively offers a solution there, if you are putting email onto your employee-owned iPhones, things like that, you can wipe that if they leave your company or they lose their phone. However, if you are allowing them to other websites, other applications, sensitive data that is ending up on their phones, you may want to look at other solutions in the mobile device management, particularly if those are devices owned by your organization. A mobile device management solution might be something that you need to consider. Again, most of the time when I'm having these discussions with my customers, I'm doing it after I've done a security assessment to understand what their risks are and where their most valuable data sits before I'm making these recommendations.
Tucker, we've got about 5 minutes left. I want to try to get through these last couple of slides and leave some time for questions, but we went through quite a bit of information in a short period of time. And I would imagine at least a couple of people on this seminar is thinking, where do I start? And I want to go back to what we were saying in the beginning. Start to think about, where do you want your security posture to be? How easy do you want it to be usable by your employees? And how easy do you make it for the bad actors, or vice versa? How secure do you make it in the inverse? At minimum, Tucker and I want you guys to do 3 things. Identify your vulnerabilities. There's nothing worse than just ignoring it and having that bad day come, and then you're going to be more upset with yourself. Get that cybersecurity risk analysis, identify those threats, and start to develop a plan to remediate that. The next thing, just validate that traditional security layer. We should all have them in place. When's the last time you got an update on the status of those? How old is your firewall? There's firewalls out there that will recognize that there's ransomware inside of your network and can help alert you to that fact. What's the status of your Windows patching? Do you have any Windows 7 machines in your environment? These are easy things that you can spot. Just ask your IT provider for an update on this traditional security layer. And Tucker, I'll leave that last one for you, buddy.
Adapt is a big thing and the theme of the day, right? So make sure you're involving HR, make sure you have written work at home policies, make sure you're thinking about security as you're writing those. Back to John's triangle, we spent a lot of time focused on making it easy and functional when we got home. We weren't necessarily quite thinking about the security there in the speed that we had to get home. So make sure that as you think through this, we're getting ready for not just the fall, but maybe the next pandemic that comes along, so that we're making sure we're prepared and have our solutions down pat.
Okay, well, if anybody has any questions, we can open up to that. I want to thank Quinn and Strothman again for having us today. I did not see any questions come in.
There was one. Someone asked, do you have to back up OneDrive?
I do see that in the chat now. That's a great question. A lot of people get comfortable when they take things to the cloud, and yes, absolutely, you need to back up OneDrive. You also should back up your Office 365 email. Just because it's up in the cloud does not necessarily mean that it's safe and secure either. There's a pretty scary video that somebody sent me the other day. He's a white hat hacker, which means he knows how to do the bad things, but he does it for good. Your Office 365 email can become victim of ransomware, and so can your OneDrive. So yes, you definitely need to be looking at backing up in your OneDrive, excuse me. That goes
So-
for the same. I see another question, and is that a stronger product than G Suite? Office 365, is that stronger? Tucker, I think they're kind of one and the same, right?
Actually, I would disagree a little bit. G Suite is a great product, but if you read the EULA around G Suite, Google makes their money off of data mining, and there's not quite the privacy there that the Office 365 offers. Office 365 is natively HIPAA compliant. G Suite is not. So there are some differences, particularly from a security perspective. I do not worry about things like cybersecurity and that sort of thing in G Suite any more than I do in Office 365, John. But just from a privacy perspective, there are differences between those two platforms. And if you're in a highly compliant environment, G Suite may not be the right fit. However, it's a fine product, but you just need to be aware of some of those differences.
I think in terms of backup and risk of ransomware in that cloud service,
Yeah, you're
both
fine there. No difference there at all,
Yeah.
John. The other thing I would mention about O365 and OneDrive is just simply the idea that it is end user driven. So an end user can delete those files and you may not be able to get back to them. So without a backup solution, there are issues that we run into where things have been deleted and I can't recover from if I don't have a backup in place.
So Tucker, I want to respect the time that we've been allotted. We've got one more question. I may have spaced a little, but what about getting a personal VPN? First of all, Tucker and I tried to make a boring IT topic a little bit more exciting. I hope we were
We
somewhat
obviously
successful in that.
failed for Marcy, I guess, John, but that's okay.
What do you think about a personal VPN, Tucker? I think she's talking about the stuff we see advertised on TV. I hear it on podcasts.
Yeah, I certainly don't think it's a bad idea by any stretch. At the same time, before spending money on something like a NordVPN or one of those other products, there are just simple things that we can do to secure our home environment. One of the most astounding things to me is that the home routers all have the generic password on them. You know, things, just basic things can make you secure. You know, the old adage is, I don't have to outrun the bear, I have to outrun you. And that's really the way we need to think about IT security. As much as we've talked about those automated ransomware attacks and things like that, they are lazy. They are looking for the vulnerabilities. So if I have hardened my environment just a little bit, chances are I'm going to be skipped by. And that's the way you need to think about it, is just more about attention to it versus adding a ton of new products. It's making sure that you've hardened what you already have, John, in my view.
Glenn, thank you again for having us, and everybody at Strothman and Company. Appreciate the time, and everyone else, thanks for listening to Tucker and I. We hope you learned something, and we at least got you thinking about going to check on the status of your cybersecurity.
Thanks, John. Thanks, Tucker. I really appreciate you guys contributing that today. It was right on theme, exactly what we wanted to cover for people. So thank you so much. John's contact information was at the bottom of each of his slides, but if you missed that and you want to get connected with them, reach out to your Strothman and Company contact and we'll make sure that you get connected with John and Tucker. So
Thanks, everybody.
so much. Okay, so I want to spend the remainder of our time today talking about some Lean Six Sigma concepts. So Lean Six Sigma started in the manufacturing industry, but there's been proven success in professional services firms, including at Strothman and Company. A few years ago, we went through a process to review our tax procedures, trying to find ways to make things more efficient, and it was really eye-opening. I've always been interested in working with procedures and processes, looking for ways to make things better in that area. So I was involved in that process, and I recently took a course to start a green belt certification for the Lean Six Sigma process. And so I want to share some of what I learned there with you all today. What I'm going to cover today is not super detailed. We only have about 20 minutes left, so it's obviously not going to be the full process that you would go through, but it's still probably going to feel like overkill to some of you. But one of the concepts that comes out throughout the discussion about Lean Six Sigma is putting more time and effort up front to ensure that you get more productivity and more efficiency later throughout your process. And I think that applies also to the actual process of reviewing your procedures as well. It's important to spend time up front analyzing what's going on, being honest about what's happening in the process, and looking for ways to do things better. It's a long, involved process if you do it the right way, but when we use this process in our tax group with an outside facilitator, we were able to make some changes that we didn't think were possible before and present them in a way where those changes were going to stick. Okay, so why is this a process that we want to talk about today? I think you can really boil this down to two main factors. So the first would be a focus on customer values. And I'll be saying this the rest of our time today. What's really important to your customer? How can you take your processes and your day-to-day activities and really boil everything down to focus on what it is that your customer really wants and really wants to pay you for, and open up more time to focus on those higher value actions? And then the second piece is a focus on a continuous improvement mindset. So the quote here is from a manufacturing company, but I think this applies to anybody that uses technology, which is pretty much everybody, right? So this quote says, if we're doing the same thing 90 days from now that we're doing today, we believe without question, we're being passed by our competitors. So it's important to develop that continuous improvement mindset so that you're always revisiting what it is that's important to your customer and your client and your patients. What is the thing that they want from you? What are their expectations? And continue to make changes to meet those expectations. So indirectly, this stuff is going to lead to increased revenues, decreased costs, and improved employee morale, which are great things every day, but I think especially in our current environment where so many businesses are struggling, those are even more important things today. So there are two pieces to Lean Six Sigma. The lean piece is about velocity and efficiency. So lean is about making your process more efficient, gaining capacity in your process, gaining utilization, so gaining more time to do those things that are important to your customer, and speeding up the throughput of a process. So speeding up how your service is provided. The second piece is the Six Sigma piece, and this is about quality and consistency. So this is making a process that rarely produces defects or quality issues, focuses on increasing quality earlier in the process, and removing variation as much as possible. So if you were to look at the lean piece and not use the Six Sigma piece, you might be speeding up the amount of defects that you produce. So you could be providing services faster to your clients, but it might not be quality service. It might not be the things that they're looking for, the things that are important to them. If you only use the Six Sigma piece and you don't look at lean, your processes may still be producing waste. So you might be creating a quality product or a quality service, but you might be wasting a lot of time to get there and not opening up that capacity to do those higher value things. So when you combine Lean and Six Sigma, you're reducing your cost, you're improving your quality, and you're maximizing your productivity. So you're doing what your customer wants, when they want it, how they want it, and you're doing it well. So again, Lean is about the efficiency side, making things more efficient and gaining capacity. So again, said a different way from a professional services perspective, this is about gaining more time for you and for your employees to do the things that your customers really want, the things that your customers really want to pay you for, and the things that your customers are going to tell other people about that they're so happy with you for. So there are 5 principles of Lean. The first is identifying your customers and what they value. Again, the clients are interested in paying for activities that add value to what they're doing, that help them reach their goals. So you need to look at who your customers are, what their expectations are, and then look at each of your activities and determine if those are things that truly add value, or if they enable something else that's going to add value, or if they're things that aren't really value added that maybe you can remove from your process. The second principle is mapping the value stream. So this is laying out the steps in your current process and trying to eliminate things that don't add value, keeping your focus again on what it is the customer is looking for. The third principle is creating flow to the customer. So this is really looking at where do things get backed up in the process? Where do things slow down? Where do we have issues delivering that service? Trying to identify those areas and fix those things or get rid of those issues where you can. The fourth principle is establishing a pull based on customer demand. So this is ensuring that the client is going to signal the process initiation. So it's basically making the resources when they're needed by the customer, not when the resource happens to be ready. I think a good example of this would be something that we used in our tax process. So the way we used to do things was assign everything out to all of the resources that we have available. So assign all the returns out to everybody, kind of hope everybody's even, hope that things get done in a FIFO order. Maybe they do, maybe they don't. The way we do things now is we have a pool system. So our preparers take the very first return that's there. So we're doing things in order that the customer is asking for them. So that's kind of an example of a pull process. It's a very easy concept in manufacturing. It's a little more complicated in professional services, at least in my brain. So I had to think through that example. The fifth principle of Lean is seeking continuous improvement. And this is another thing that I'll say over and over. So this is putting consistent effort into meeting those ever-changing needs, continuing to look for what does the client need, how has that changed, and how can we change to adapt. So the Six Sigma, again, is about quality and consistency. And there's a framework that you can walk through in looking at those quality issues. And it's referred to as the DMAIC framework. And DMAIC stands for define, measure, analyze, improve, and control. So I could probably spend about an hour on each of these. Obviously, we don't have that time today, so we're just going to go through these pretty briefly. But the first phase of DMAIC is define. So this is when you're pulling your team together, setting the rules for the team, making sure everyone is comfortable, sharing their ideas, gathering the information needed, developing your project charter, really defining what it is you're trying to accomplish. What things are we going to focus on? What are we not going to focus on? What is the process we're looking at? What is our objective? What is our scope? The second phase is the measure phase. So this is where you're looking at the current state of the process. So you're gathering data. The team puts together a visual map of what the process looks like now. And it's really important to be honest about how things are really getting done. So don't focus on the process you already have put together if that's not really what's happening in the organization. be honest about what's really going on. The next phase is the analyze phase. So this is exactly what it sounds like. You're looking at where there are issues in your current state and then looking for the root causes. And if you can pull actual data to back up what those causes are, that is really going to benefit you. People may have opinions about this technology is the issue or this person is the issue, things like that. Wherever you can back that up with actual data, it's going to serve you well, because then you're making sure that you're looking at the right issue and the right causes and making sure that you're focused in the right area. The next phase is the improve phase, which again is exactly what it sounds like. You're looking for solutions to what those causes are of the issues that you've identified. You're running tests and gathering additional data. You might have some things that you think might work. So you're going to go back, get some more feedback on those things, run tests with those where you can, and then create the desired future state of the process. So this is what the team thinks the process should look like now. And then the final piece of DMAIC is the control phase. So this is a focus on training and education of the new process, making sure everyone understands, everyone's on the same page, everyone has all the resources that they need, monitoring the performance after the improvements are made, documenting the results, comparing to what the old process results were, and then what you expected the new process results to be, and then developing procedures to hold the gains and to support continuous improvement. So one of the things that you want to do is, again, the point of this is to gain capacity, to make sure that people have time to do the right things that your customers want. So if you're creating additional time and then not using it in the right way, that's something that you want to take a look at. And then supporting continuous improvement, again, is just making sure that your process is not going to be set in stone. This is the process, the new process that works now, but it's not going to be the process that works forever. So opening up that communication for people to comment and provide feedback on what needs to change going forward. There are 9 categories of waste, and those can be summarized with the word downtime, which I realize is only 8 letters. The course that I took, they added a 9th one, which was attitude. So I meant to change this slide and I didn't. Downtime. So again, this is an area where we could spend a lot of time giving examples in each of these areas, and we don't have the time to do that today. So we'll just walk through these briefly. So again, this is where you're trying to eliminate waste. You're walking through your process, looking for each of these things and trying to get rid of that waste where you can. So defects, that's the amount of time that you're spending fixing errors, looking for errors, looking for things that are going wrong and fixing them. Where can you remove that time? Overproduction, this is producing more than the customer needs. Maybe along with your service that the customer actually wants, you're doing something that is not necessarily something that they value. And that's something to take a look at and determine if that's worth your time. Waiting is idle time created when material, information, people, or equipment are not ready. That's going to back up your process. Non-utilized talent, obviously this one is huge in the professional services space. So not adequately leveraging people's skills and creativity. As professional service providers, our biggest resource is our people. And if we're not using everyone's skills and creativity, they're not going to be happy, our customers aren't going to be happy, and we're not going to have that capacity to meet the customer's needs. Transportation is moving products, equipment, material, information, or people without any value add. And then inventory is unnecessary storage of information or materials. A lot of these are similar. Motion, unnecessary movement of people or machines that takes time and uses energy. And then excess processing. again, process steps that do not add value to the product or service. So things that we're doing that we might think are important, but they're not really things that the customer values. How much time are we spending on that kind of stuff? And is that time that we can cut down on? A lot of acronyms. So one more acronym, FEMA. So as you're walking through each step of your process, these are the questions that you want your team to consider. So FEMA stands for failure modes and effects analysis. So each step of your process, you want to look at what can go wrong. What can go wrong with this particular step? What is going to slow this step down? What's going to slow our process down? And then for each of the things that you identify in every step that could go wrong or slow things down, you want to look at what the impact is to the overall process and to your customer. So here you're looking at, maybe we feel like this is a big deal, but it really doesn't affect anyone. It's not holding up the process. It's not holding up things to the customer. Maybe this is not an area that we need to spend a lot of time trying to fix if there's not a lot of impact. If you decide that it's something that does have a lot of impact and you do need to fix it, what are the causes? What's making this thing go wrong with this process step? Why is this slowing things down? What are the causes? What are we doing to make sure it doesn't happen? Are there things that we're doing now to prevent those issues? How can we make changes to that? And what are our recommendations for improvement? So again, this is a long process if you do it the right way. This is looking at every single process and asking every single step of your process and asking all of these questions. But when you do this and do this work up front, you're going to come up with a much better overall recommendation for what the process should be. I want to wrap things up just by giving some tips for the things that I thought were really important throughout the process. So the first one is bring in an outside facilitator. So your first thought, if you're going to review a process and go through and try to make it more efficient, your first thought might be to have whoever in your organization is in charge of that process or who knows the most about that process. And that could be an issue for a couple of reasons. If that person is the person that knows the most, they may already feel that they know what the answers are. They know what the best practice is. They may feel like what you're already doing is the best practice. And if that was the case, you probably wouldn't be walking through this system. The other issue with that is that the person that knows the most in your organization about that thing is probably a high-level person. And so the team might not be as open about any ideas or any changes because they feel like this person is in charge. So it's a better idea, instead of having your organization's subject matter expert, to bring in an outside person who's an expert in guiding a team through this process versus an expert in that area. So the facilitator's job is really to ask the right questions to get the team to the right answers. It's not the facilitator's job to have or provide the right answers. So this is going to lead to a lot more discussion about different opportunities, different ideas, as well as more buy-in, because the ideas that you come up with then belong to the team instead of belonging to the facilitator. The second idea would be bringing in a cross-functional team from your organization. So you really want to have people from different areas of the firm, not just the team members in that specific area for that process. You want to get a more holistic view of the process. You want to see how it affects people outside of that particular department. And that as well is going to give you more fresh ideas, bringing in different perspectives and different people who aren't involved in that process every single day. So your most effective team is going to be one that's made up of subject experts from all over your firm, and a good mix of newer and younger team members and the more experienced ones. The third tip would be to keep your why in mind. When you're trying to make changes to people's day-to-day activities, there's going to be some emotion involved. I know I don't like change. This year, you just kind of have to get over that. But making those changes is hard, and it's important for everybody that's on your process improvement team to be able to communicate why it is we're doing this. Why do the changes need to be made, and why do we think this new process will be better than what we had? They have to be able to articulate that to anyone in the organization. So having the team work together to map out your current process in a visual state allows everybody to see exactly where there are issues and opportunities, and it gives you a why that you can refer back to anytime. 100% buy-in is a myth. You're never going to get everyone on board. Not everyone is going to be happy with changes. It's really easy to get stuck and focus on those people that are not going to want to play along and not go along with the changes. But a better focus would be spending your time on the many people that will go along with the changes, and making sure that they're educated and that they have the resources that they need to stay on track. And then defining success as being able to move forward without that 100% buy-in. Finally, again, it's all about continuous improvement. It's easy to slip back into old habits. It's easy to take that extra capacity that we've used and that we've created and use it in the wrong way. So it's important to keep communicating, keep the idea flow open so that people feel encouraged to suggest changes and new ideas. And again, your new process that you create is not going to be set in stone. That's not going to be the process forever. So you will continue to make changes when necessary. I want to thank everyone for joining us. Feel free to reach out to anybody on the team if you have questions about how any of this information applies to your specific situation. I want to thank my team again because they're awesome, and thanks to Vince and Jess. And I also want to mention that the next Strothman seminar will be presented by our manufacturing industry team, and it will be on Thursday, September 24th from 8 to 10. And this will be another virtual seminar. Someday we'll be able to see each other in person again. Have a great day, and thank you so much for joining us. We really appreciate it.